I'm going to turn it over to Duncan Riefler to kick us off.
Okay, thanks, Mark. Thanks for making this network available for everybody. Appreciate all the effort you put into that. And Sean, thanks for the intro to infrastructure, inclusive of the water topic. I'm Duncan Riefler. I'm co-hosting this event with Leslie McCarthy, who will speak as a panelist. We share interest in a precious resource that needs to be better understood and provides opportunity for many people involved in the 361 network and others that may be listening in. Today, we hope to educate and promote activity with this roundtable, The Shape of Water. We have 6 panelists in a roundtable format. We will lead off with a global overview and then call on participants who will each speak to their unique engagement in the water industry for 5 to 7 minutes each. Upon completion of the panelist remarks, we'll do a Q&A with the panelists to be followed by engagement from the broader attendees. With that, let me introduce Dan Baina. Dan had a distinguished career at PepsiCo, and he now runs his own water consultancy. And Dan, we're ready for you.
Thanks so much, Duncan. And I'm going to try to share my screen. You have to relinquish control, I think.
Done that.
Okay.
Hi, Dan.
Can everybody see that?
Yes.
Yep.
Perfect. So I want to thank Mark and Duncan and Leslie and the entire 360 firm for this, because it's a remarkable opportunity, obviously. But before I get into the material of the presentation, I did want to comment on Zales and Sean's comment about infrastructure, because I think this is an opportunity where we might actually learn from some of the developing and emerging economies. I work for, as a consultant, the Safe Water Network, and this is not a commercial for them. It's literally just to share an experience that they've had, which is small water enterprises, locally owned water businesses, and they're not the only ones to do that. But they are small, decentralized systems that use the power of enterprise rather than these large monolithic infrastructure installations. And they've been doing that in Ghana, in India. Others have been doing it all across the world. There was a study by Dalberg recently that said up to 1 billion people actually may be well suited for small decentralized systems. So I think there's a real opportunity to rethink our infrastructure going forward here in the US. And with that, it's my 2 cents on infrastructure. I'd like to share my screen and share some slides with you to kind of give a really big picture about water. But I want to start with as small a picture as you can possibly get. And that's the photo that you see on the title slide. That is the water molecule. It's a stylized depiction of the water molecule. And let me tell you guys, it is magical. And it's magical because there's no other substance in the world like water from a chemical perspective. And the angle that you see of those 2 hydrogen and 1 oxygen molecule is unique to that molecule. And one of the things that does is it makes water a universal solvent. So when we start to talk about water quality and the contaminants that can go into water, it's because water is a universal solvent that we have many of the problems that we do. There was a quote from, kind of accredited to an ancient philosopher. And I think when people can't identify the source, they say it was an ancient philosopher. But the quote goes, to some extent, water can dissolve everything known to man. And I think there's a really good reason chemically for that. So keep that in the back of your mind, the uniqueness of water, all the way down to the very chemical molecular level. And now let's go from as close and as small a level as you can up to about 50,000 feet. And for that 50,000 foot view, I have a very short, about a 28-second video to share, just to give us a little bit of context.
Dan, I'm not able to hear the volume. Can anyone else?
No, I can't.
No, we cannot hear.
Okay, can I just try that once more, because it's a really relatively short video, but I think it's worth it.
Go for it.
How's that?
Yep, good.
Good.
Imagine if tomorrow we cured cancer and in 100 years there were still 1 million kids dying of cancer. It would be unthinkable. But that's the situation we find ourselves in with water.
Now, why does Matt Damon say that? Right. First of all, I'm partial to Matt Damon because PepsiCo, when I was there, was a major grantor to water.org, which is Matt Damon's not-for-profit in the water space. And the reason Matt says that is because many will tell you that the technologies and the solutions exist to solve the water crises. And I say crises because it's not just about safe water. It's about water scarcity. It's about water interlinkages to climate and to food and to gender equity and to public health. There is no single thing that interlinks and interconnects more than water to many of the various crises we face as society. So if we can get water right, quite literally, we will see unbelievable knock-on effects. So if the solutions exist, why are we still in the problem that we're in? And a lot of it goes back to what we call the deployment ecosystem. You know, it's great to have a piece of technology that can purify virtually any water quality. It's great to have a conveyance system that can get water virtually anywhere in the world. But unless you have the supporting elements within that ecosystem to support that, i.e. funding, public policy, the enabling environment that so many people at the United Nations talk about, the receptivity and the consumer demand by people who are ultimately going to be drinking water and using water, there needs to be public education campaigns and so many other things that need to contribute to this high-level ecosystem. And when we get that right, that's when we'll really start to see the needle move. So I said we were going from a molecular level to a 50,000 foot level. Now we're going to bump it up even more. And we're going to talk about something that I call God's gift to humanity. And those are the Sustainable Development Goals of the United Nations. And let me tell you, for those of you who are not familiar, these were ratified in 2015 by every single member nation of the United Nations. 193 countries saw that there was enough value in these SDGs, these 17 goals, to be able to ratify them. I don't think that's ever been done before in the history of the United Nations, where every member state has agreed so wholly on one thing. I also defy you not to find something on this page that you care about. And it may be SDG 6 around water, which is obviously the point of this discussion today, but there is something here literally for everyone. And I think this is an unprecedented time in the history of the UN to have such a framework that is comprehensive, cohesive, and interconnected as the SDGs. The SDGs obviously are a huge deal. Unfortunately, as of late last year, when the UN Secretary General issued a report, he said that the shift required to meet those goals, and now we have a decade in which to meet those goals, are not yet advancing at the speed or scale required. So we're obviously behind the 8 ball, and that was frankly before COVID struck. So you can imagine what COVID has done to investment and activity related to the SDGs. The UN needs help. The Secretary General is very transparent about that. Business, quite frankly, is being recognized for helping, unlike their predecessors, which were the Millennium Development Goals, which some of you might have heard of. They were seen very much as for government by government. And there wasn't a whole lot of opportunity for other stakeholders, other actors, as they say within the UN construct, to participate. The SDGs are completely different. Not only is there a role for the private sector and a role for the not-for-profit sector and for academics, but they are encouraging everyone to come to the table for these multilateral solutions. And I wanted to share this slide. This was very recent, literally September 23rd of this year, just last month, where the Secretary General coined a phrase. He said, "We need business unusual." Now, I can't remember a time where the UN was quite as progressive to use something that was hashtag worthy. And I think business unusual is certainly hashtag worthy. But he talks about working in partnership with civil society, with young people, right? 2.5 billion youth around the world. And we know that they are caring increasingly about environment and about water stress and about water quality and about environmental related goals. This is a remarkable opportunity for the private sector writ large to make a difference. And there's really good reasons for business to be interested. This is, I mean, it's a busy slide and I'm not going to go through everything. You can read it on your own, but the bottom line is Accenture has done studies. There have been studies up the walls with how business can actually add value, expanded value from embracing the SDGs, whether it's SDG 6 around water, SDG 2 around food security, SDG 17 around partnerships. There is legitimate business value to be brought. And you can see there's mitigation of risk, there's reduction of cost, there's growing of revenue. In the center on the top, that was a report that was done that estimated $12 trillion a year in business value across economic systems by 2030, just by virtue of coming up with solutions to those sustainable development goals. In so doing, an incremental 380 million jobs just by getting the SDGs right by 2030. And the really important thing, and I come from PepsiCo, I don't speak on their behalf anymore because I don't work for them now, but I can tell you that PepsiCo and virtually any consumer products company cares what the consumer says, what the consumer wants, and what the consumer thinks about. And in particular, millennial and Gen Z consumers. And you can see on the bottom of the screen, environment ranks high and is actually increasing in terms of the expectations by the Gen Z population of companies. They expect companies to take active roles in addressing environmental problems. And on the lower right, I put this in, guys, because I have never seen a study where 100% of anyone agrees on anything. And this study by EY says that 100% of this particular stratified portion of the Gen Zers think that their job must make a difference in the world. So when you combine the interest in environment, interest in water, with the knowledge and the expectation that they're taking a job because they want to make a difference in the world, this is a tremendous opportunity for business to leverage that momentum. But this, after all, is about water. So the SDGs was the big picture. SDG 6 was specifically about water. And this is SDG 6. It is about as comprehensive a framework to address water as you can possibly get. It is elegant. You can see that target 6.1 is about access. Target 6.2 is about sanitation, particularly for women and girls. And that's where you see that gender equity link. 6.3 is about water quality. 6.4, improving water use efficiency to combat water scarcity that Sean talked about in his introductory remarks. 6.5 is integrated water resources management. What if a particular country has the rights to a particular water source and that water source crosses the boundary of that country? What do you do? What do you do in times of war, in times of conflict, in times of peace? That's included in the goals, goal 6. 6.6, restoring water-related ecosystems. It's looking beyond the local and looking at the entire ecosystem that shares that shared water resource. And then finally, 6.A is about international cooperation and capacity building. And it's about technology, water harvesting, desalination. I mean, you just look at the oceans and the seas and you say, why the heck can't we get this right? Well, there's certainly things that are moving the needle forward on desalination, but we're not there yet. So again, we need multilateral stakeholders. We need all different opinions, all different input, innovation, and we need that deployment ecosystem that I started off this conversation about. And I want to share this brief video from the World Bank for context. one thought, guys, before I close about water quality. I'm quite sure that if I were to poll everyone on this call and say, what is your definition of safe water? I would get pretty diverse responses in terms of what safe water is. And we heard Sean's figure of over 1 billion people lacking access to safe drinking water. The words really matter in terms of some of these facts and figures. While that's absolutely true, there's another figure that talks about almost 2.2 billion people without safely managed water supplies. So when you think about the water in a developed country where you can go to the tap and turn it on and be reasonably assured that that water is not going to make you sick, either acutely or chronically, that's what we think of when we talk about safely managed water supplies. And let me tell you, it is, when they talk about it's a crisis that's hidden in plain sight, there are many organizations that are still grappling with a universal definition of what safe water really means. So I think, as we unpack this and we start to talk about the many elements of the water crisis and how the water crisis interconnects to so many other crises, it just keeps getting more and more daunting. But what can we do? This is about action. This is about using your collective strength, your collective voices and advocacy to act. And these are some fairly simple things that I believe each one of us on this call can have a part in doing. Building board level C-suite awareness is really important. And there's an organization that I know of called Competent Boards, where this woman who founded it, Hella Bank Jorgensen, came from the investment community. And she's really trying actively to get boards educated and involved in what they need to do beyond traditional financial metrics and other things that expand business value. And certainly pursuit of SDG 6 and safe water is part of that. Communicate the value of sustainable development. I talked that there are multiple studies that talk about the value. Learn about them and spread them and become champions for that. Align business. I mean, if you have anything at all to do with businesses in your portfolio, in your investments, in your personal lives, tell them, you know what? You guys should be embracing the SDGs in a really material, significant way. And if you need help, check out what the World Business Council for Sustainable Development is doing, the WBCSD. There's a link here on this slide to their learning platform, which gives you a stepwise approach to how a business can slowly over time become materially involved in the sustainable development goals, whether it's goal 6 about water or any of the other 17. Promote and become active. Many of you might have heard about the UN Global Compact. I mean, it is a remarkable, remarkable entity that sits within the construct of the United Nations, and it is now 12,000 companies strong, and they're focused on 10 principles around environment and labor and human rights and all of the things that matter to responsible business. They're getting more and more CEO signatories to the principles of that compact. And one of the streams, particularly about water, is the CEO water mandate. And when you talk about what does water stewardship mean, I urge you to look at that CEO water mandate site and learn about those 6 principles that you see on the slide. If you are involved in education, there again, it's called PRIME, the Principles for Responsible Management Education. We need to teach the next generation of students who are currently in business schools about this expanded approach and expanded definition to business value, how businesses sit a part of society, not apart from society. And that is not mutually exclusive to business value or business, moving business forward. And then finally, consumerism. I kind of hinted at this with the Gen Zs and the millennials. There are no consumer groups, in my experience, that are more active now in terms of their activism and their expectations of companies. And it used to be that they might just boycott, they might just not buy certain things if companies don't meet their standards. Now they are taking much more active stances, much more aggressive stances in making clear their expectations of companies. And companies really do listen. And then lastly, and this is something that I hope you'll find inspirational, there is something called the breakthrough mindset. And there's a video that goes with this. It's, again, part of the United Nations Global Compact, but it talks about challenging ourselves and everyone that we know, not to just go 10% better, but to go 10-fold better. That's the way we got to the moon. That's the way we're going to get to Mars. That's the way we're going to solve the mixed water crises that we have. We need this breakthrough mindset, and we need to give ourselves permission to think not in incrementalism, but in breakthrough solutions. And the Safe Water Network that I mentioned earlier, one example of that is around that small decentralized system. And I just want to give you a data point. In a sector where roughly 50% of water-related projects fail in the first 5 years, and frankly, depending on the source, that can be anywhere from 30 to 70% of projects failing in the first 5 years. Safe Water Network's small water enterprises in India and Ghana, 99% of those stations remain in service 12 years later. So, it's one example of many, not just by Safe Water Network, but by many other implementers of solutions that are local pockets of success that need to be scaled and spread and replicated for much larger impact. And with that, thanks so much for your time, and I'll turn it back to Duncan.
Wow, Dan, thanks very much. That was a really powerful overview. So I think what we can do now is we'll start talking to some of our panelists. And the first one is going to be Mark Robert. Mark is a senior partner at Specialist Asset Manager, Water Asset Management. Mark?
Thank you, Duncan. Thank you, Dan. You certainly set the table, as did the previous speaker, on the long list of challenges and opportunities we have in the water sector. I'm going to come at it, and one of the reasons why we formed our firm back in 2005 is that this is a fantastic business opportunity. It's not only the right thing to do, but it is a great place to deploy capital, in the sense that water has many unique qualities. One, it's non-substitutable. Two, it's got a good pricing mechanism and good visibility on demand. Three, it needs, as you've all laid out, tremendous amounts of capital, and generally has been mispriced and misallocated. So from a capital allocating point of view, we think this is just a very attractive area to invest, and the opportunity really is very much ahead of us. We have enormous opportunities to better transparently price water. And I think the real issue here from our perspective is not that, I think people recognize the need for water and proper sanitation in not only promoting social stability, but, health. And obviously COVID has brought to light a number of the issues around, improper sanitation and how do you manage in a pandemic, and the need for water to wash and provide, a first line of defense against the pandemic. But most importantly, people need to place value on water. The big issue here, and I will take issue, is it's not a lack of financing, because there's been plenty of examples of financing. It's people being really willing to assign a value to water. And if there's anything we should come away with from our perspective today, is that water has a value, water has a price, it has been historically mispriced, and we have taken it for granted. That's why these systems continue, or these issues continue to exist, is because we have undervalued water. And from an asset allocating point of view, that is not going to, we've got finite supply, we've got growing demand, that is not going to continue. And so the underlying asset itself is going to cost more. What we pay for is going to, how we use it and how we pay for it is going to change. And, we do need a lot of new thinking about infrastructure. We need to have much more flexible management of water. But the real issue is that we need to assign a value. And so our firm has been really very much focused on that. We invest both publicly and privately in water. We spend a lot of time on water resources. On our private equity strategy, we invest in physical water. We own water rights in the Western United States. And it is a chronic problem where water is being misallocated and mispriced. And for the world to continue to grow, you're going to need much more transparency around that. So that's sort of our overarching view on water. We see tremendous opportunities. We think it should be part of everybody's portfolio because unlike energy, unlike many of the areas of infrastructure which have appealed to investors, you know, water has a certainty about it. The volumetric demand is very uneconomically, you know, it's not very economically sensitive, and you have generally pretty good inflation adjusted pricing on a lot of this, a lot of the water systems. The big issue has been the allocation of capital has been in hands that have not necessarily, they've been very focused on CapEx from a development point of view, but not very interested in OpEx. So many of the systems fall into disrepair. To Dan's point, many of the systems that NGOs and other sponsors put in place in the developing world do fail. And so it's really a question of how do you break that lack of financing and lack of financing of OpEx and supervision of the systems. And I think we have a good bunch of people on the panel today who will talk about that. But it is a tremendous opportunity. And quite frankly, we think from a portfolio allocation point of view, in a world of uncertainty, water offers certainty. You got good pricing, you got increasing demand, you don't have a lot of supply that can come in and take advantage of it. It's a very local commodity. You know, water cannot be shipped from Iceland to Saudi Arabia to take advantage of increasing demand in, you know, parts of the world that are showing incredible need. So from our vantage point, very interesting from a financial point of view. From a return perspective, very stable and predictable. And from a capital need point of view, huge buckets of capital needed. You know, I think from our, I'll just touch on one point that we see increasingly important from a risk point of view. And we think the solution really here is, obviously, SDGs are very important and water solves a lot of them. I think the growing investor demand for impact plays straight into the water world because water is very impactful on a whole host of levels. You know, gender issues, societal issues, humanitarian issues, health issues. But the real risk is that it is a business risk. There is major business interruption risk here for many, many of the companies in which we're all invested in. And the need to better plan and to better allocate water for future use is going to drive tremendous investment in both acquiring and diversifying water supplies. And we think that's a growing area. And the best way to do that is through price transparency. We think transparency will solve many of these issues. Technology has been an area where a lot of people have been drawn to, but the industry itself has been slow to adopt. And that has been a problem, not because the technology isn't valid, but because the incentives to adopt new technologies and adapt their systems have been very low. And a lot of this has to do with the ownership of water. Many of the water systems in the world are owned by governments, both local, state, and federal. And their incentives to innovate and maintain the systems to the level they should be have been more politically driven than outcome driven. And that is an issue. And as a result, we're big believers in regulated models. We like regulatory oversight of water systems because it helps triangulate the transparency around what the systems cost, what people can afford to pay, and what people need to earn as a return. So lots of opportunity here. I don't want to take too much time from one of the other speakers, but we're very excited. We see tremendous opportunity on the water resource side for better allocation in those markets where you can trade it. We see tremendous opportunity on the infrastructure side. And we see, to Dan's point, greater need for flexible utilities. So the utility of the future, which may be able to grow and shrink as demand dictates. So with that, I'll turn it back over to you, Duncan.
Okay, thank you, Mark. As long as we're on this topic of pricing, let me now introduce Lance Coogan. Lance is the founder and CEO of Bellas Water. He has invented the first ever water index. Lance?
Yeah, hi, can you hear me?
Yes, sir.
Okay, good, good. All right, thank you for that, Duncan. Thank you, other speakers. Mark, you touched on a number of important issues there, but let me progress it. So basically, I've been looking at this water market since about 2012. I designed a water trading system and exchange in South Africa. They have a problem where there is water around Johannesburg, and it's got what they call acid mine drainage, is that 150 years worth of mining is polluting the water. And they've got other areas where no water, and I designed a system based on a cap and trade basis, and reverse osmosis works very well with those heavy metals in the water. And it was a very good solution, I thought, because it dealt with the impoverished areas. They got their water for free, and the big industries had to pay for it and subsidize other areas. And nevertheless, the government didn't accept it because they said it was a capitalist solution. Post that, in 2016, I set on a mission to basically list the price of water. Having a look at all the water markets, the most important commodity in the world doesn't have a price. And if you ask people generally around the globe, what's the price of water that comes out of your tap? They don't know. So everyone knows what a bottle of Evian or Pellegrino costs, but they don't know what the general water costs. So a lot of water indices, but they were all related to equities, and basically they mirrored the Dow's performance to a lesser degree, and they had no correlation to the price of water. So there was, in my view, a real urgent need for people to know what the price of water is. I mean, how on earth can you plan to build infrastructure and delivery of water when you don't know what the price of your asset is? To me, it's just, it's an enigma that you can think you can do that. So, long story short, worked out a formula methodology which basically gave a way of pricing water. I then needed to list it on an exchange that you need a market that meets exchange criteria. And so 4 things were needed. To list on exchange, you need volatility. You need, because people want to trade it. You need volume in dollars. It's a certain critical mass. You need number of trades. You can't all be like $1 billion worth of water in one day. It's got to be spread out over time. And then you need the data. So we had the first 3, I think. The data, I was very fortunate enough to meet Westwater Research, and they have data and many years of water prices traded in California. So the water was already trading in California. So we worked on a methodology for California, and in fact, water's been traded in California for over a century. But the water trades were coming more and more towards a commoditized price. So what we did is we took the surface water price and 4 adjudicated basins prices. I would have preferred to use just the surface water price, but you needed the volumes from the adjudicated basins and the extra number of trades that take place there to meet criteria. And actually, the end result is a great result because groundwater is becoming more and more important. So it's what we have is now we have a price that represents supply and demand. If I could have that slide back again of the index. There. So if you have a look at that index, you see those big peaks there. Those are in times of severe hydrological stress. Basically, drought times are those peaks. And when it crashes down, it means it's been plenty of precipitation. So that's why I like the index. Look, obviously I'm a bit biased towards index, but it represents stress in the system. If you see the price going up, you know there's something wrong. If the price is coming down, then you know there's precipitation out there. It's as simple as that. Now, it's not everyone's price of water, but it represents the system, and in that region in Southern California, that it shows you when there's stress in the system. So what we would like to do, and what we have done, is very important, is that this is a cash settled index. It was too legally complicated to start with a physical delivery index. So we're starting with a cash settled index and we'll move to physical delivery later. But so this index does not affect water moving anywhere in time. What it does is it is a representative of the state that water is in Southern California. People are paying up dramatically because there's a drought on hand and they're trying to defend their crops, and they're not buying anything when it's raining. So that's what it represents. Now, what I want to point out, what else is it do? What is it doing there? It is the prime indicator, I believe, for governments, businesses, municipalities, agriculture, mining, etc., of the condition of the most important commodity that they use. Now, there are people who take negative views about pricing of water and having water as a commodity. This index tells you when there's a problem and when there's not a problem. If we have a look at the next index, the next page, if I could have the next slide. So the next one on. Okay, so this is this year. So now you see there's a big jump in the price there. Now, why is there a jump in the price? There's a jump in the price because in February, it was the driest February in 120 years in the Central Valley in California. There was no precipitation. So now this is showing you that there's a problem. The farming community obviously knew that, and they were scrambling to get water because they'd seen there was no rain. Fortunately, there was a little bit of rain in March, but it wasn't enough. So what happened in California later? You had huge wildfires which burnt huge tracts of land. Now, surely, if you're a government or any monitoring body, if you see your most important commodity doing something like this, surely you should be noting there's a problem here. And this should be used as an indicator to monitor the environmental situation on the ground. And I want to put it out there. Possibly, we could have been better prepared for those wildfires if people had been watching this, because it's telling you there's a problem. So, I'd like another slide back, the previous one, please. One which had many graphs. Duncan is
Mark,
who's
can you
off
move
track.
that other slide?
The previous one to this?
So again, there are 3 slides I was given.
Yeah, the middle one. The middle one. The one that's got multi.
It would help if I resume share. Yes, there you go.
That's it. That's it. Okay. So now, if you see what this is, this represents a whole lot of commodities and what they're doing going into the COVID situation. So, and you see the oil price famously went negative, and the water price is completely uncorrelated to other assets. And that's a major thing, firstly for portfolio management and diversity, but second, just showing that it doesn't get affected by what everything else gets affected by. This big price rise is, as I said, it was because of the precipitation or lack of it in Central California. So if you're a portfolio manager and you had some water in your portfolio and you were talking to your risk officer near the end of the graph there, you'd be looking a whole lot healthier than the rest of your colleagues who didn't have such a spread of risk. So with that in mind, the fact that it represents a shortage of water and a water asset that is quality water. It's not the highest quality water that there is, but it's quality water. It's good water. It is actually a direct hedge against climate change. And it is, I'll put it out there that it's one, if not the best hedge that we have at present against climate change, because whatever is going to happen with climate change, you're going to get more and more shortage of water, greater demand, and yet, as Mark had said, it's mispriced. The price is going to go up. If what everyone says is going to happen, if that's going to happen, the price of water in California is going to go up. So there's a direct hedge from an investment point of view if you're looking for something like that. Then I want to talk about, it's on my, I only read it yesterday that I'm meant to talk about water and human rights and that's, water itself is not a human right. It's the right to water is the human right. And everyone should have the right to water. But back to my previous point, how on earth can you create your financial models and your infrastructure if you don't know the price of the asset that you're doing? You have to know the price of your asset. And that's what this is bringing. And this is the start of bringing financial services to the water market. There should be more indices. There should be more listed debt instruments, all related to the water price and the water market. What that will do is it will focus a lot of very clever people, a lot of investment people into getting the best returns. Everyone will have an idea of the supply and the demand. It brings transparency to the market. It's opaque markets that create corruption, collusion, etc. This brings transparency. There you can see it on a screen, and that's why I believe in this. I think it provides what the world needs today to go forward. And on my last point is that money is the most important, and the allocation of money to water resources and delivery of water is the most important thing. And with water, if you have a look at the world, there is a lot of water, but most of it is not drinkable. So if you don't manage your money correctly, you're going to run out of money before you run out of water, because there's enough water, but it's not in the right form. And you've got to spend money on the water to get it in the right form. So therefore, I believe that bringing financial services and instruments to create the value in the water will address the issues of water shortage. Thank you.
Thank you, Lance. I'm going to now introduce Alex Lokopoulos. Alex is a partner at Specialist Alternative Manager Scions Capital. Alex?
Yeah, so thank you, everybody, and a great kind of start to this. I'm probably the neophyte in the water space. Really started looking at it about 6 years ago, and I think like many people on the call and on the previous kind of data presentation, water is extremely confusing. It's literally everywhere but nowhere, and there's different pockets to it, and there's different ways of dissecting it. So what we did at Science about 6 years ago was we took it from 50,000 feet and we said, let's go to the very basic level and let's start at 0 or negative feet, in fact, with the pipes. And we said, what does that really mean? And fundamentally, where is the opportunity set, both for impact, but also in terms of financial capital, being an investor? And so we set about trying to simplify water. And the first thing we did was, I think it's really hard when you're looking at the granular level is to think globally. So we said, let's just focus on the US, because the US is a huge market. It's got its own set of problems. And also fundamentally, water and the problems that it faces, I don't think can be solved at the global scale. It's a very fragmented local level. So we said, let's focus on the US. And within the US, let's focus not on the, let's say, as many people on the call have said, on the pricing side or on the technology side. We said, let's focus on the infrastructure side, because we fundamentally believe, and continue to believe even more so, that without that, and without having the right type of infrastructure and the right types of businesses driving that infrastructure need in the water space, I think both the technology will get stuck, a lot of the impact will get stuck, a lot of the discussion around what's the actual price or distribution of water will get stuck. And we also fundamentally saw that because that market happens to be extremely hyper-localized and extremely fragmented from an operating side, that there was a vast opportunity to do that. And so what we did in simplifying that, we decided to look at 3 themes that I think are fairly simple in terms of looking at them. And some of the facts have been thrown out there today. In the US, you have 60,000 water systems. What people don't realize is that most of those 60,000 water systems are actually in private hands, not in what one would think in terms of municipal, because people think water, municipal, utility, municipal. Well, in fact, in the United States, that's actually not the case, because the vast majority of those 60,000 are actually private and unnecessarily private. So we set about really going down, understanding where are these systems, who are they, and spending time with that and looking at it at 0,000 feet. So the next problem that we saw our opportunity set was, how is technology really being applied here? And we looked at treatment. And we saw that, yes, the larger treatment companies that were solving the big municipal problems had access to technology and were pushing it through. But the vast majority of the mom and pops in the treatment business, frankly, the technology was being stalled or was not being implemented and wasn't being applied appropriately. So we set about really understanding where these smaller treatment companies and how to apply them. And the third theme that I'll throw out there was in terms of pipe rehab. You know, people talk and say, there's 1.5 million miles of pipe. How do we fix it? It's really old. It's from, you know, when Abraham Lincoln was president. That's absolutely correct. So how do you fix it? Well, you fix it by spending time with the plumbers, understanding what they're doing, and helping them figuring out technologies that will basically reline or repipe or fix or be diagnostic software for them to actually fix these problems. So our approach to water, and I'll summarize with this, is really, we started and fundamentally believe that the financial capital needs to start at 0,000 feet and be put into these businesses, because these businesses that are private and so forth will be the ones that need it the most, will be the ones that unleash the most amount of value, both in terms of returns, but also in terms of impact, because we see it that not enough energy has been spent on them, because it is so complicated and so vast that it's incredibly difficult to navigate. And I'll say, you know, 6 years in, we're still just beginning to scratch the surface of the various pockets of water, because it is so confusing. But I would say that the positive element of it, that the current crisis has certainly accelerated education, like this forum and many others, in terms of people understanding the facts and the need to change. It's accelerating the human capital that's gone into it, in terms of the next generation of leaders that are going to drive these companies and help them grow and really implement them at the ground level and across the board. And also, we see that a lot of financial capital is recognizing that water is no longer just, you know, investing in a few select large publicly multi-billion-dollar public companies, but spending time to invest in businesses that drive the impact and need the capital, and the ones that are going to be growing dramatically. So thank you for the time. It's an extremely exciting time to be in water, and And I would encourage everyone to, this is not a short-lived discussion. This is a discussion that we certainly at Science Water believe will go on for decades because the problem is so big, but one that we can slowly begin to chip away from, and that the current situation and the current excitement around it from an education and from an operating perspective is highly encouraging. So thank you.
Thank you, Alex. Let me now introduce Patrick Wolf. Patrick is Head of Product Development at NASDAQ. Patrick?
Thank you, Duncan. And also thank you to 361 and my fellow Roundtable participants here, and for all of you for joining. I'm very excited to talk about NASDAQ's perspective and NASDAQ's journey into the water space over the last few years here, and kind of provide our own vantage point. So, firstly, I think a lot of the topics that particularly Mark and Lance touched on, certainly, from my perspective, I share those sentiments, and I think I'm really going to focus here on trying to provide a bit more of perhaps a visual and quantitative side of things, because that really is my disposition within the index development world, to look at things from the empirical perspective. And so, with that being said, if we could kick over Duncan to the first slide. What we see here is the value and volume of water traded in the Western U.S. over about the recent 10-year period, so up through 2018. And so, to put some numbers behind the fact that water already is a traded asset, it is one that clearly has tremendous value, realized value that is, in terms of the valuation set on the asset itself. And obviously, this is a sizable market. And as you look at this map, Mark touched on the fact that you can't move water across state lines. Then that is a tremendously, a great limiter on the level of transactional activity. But within states, and particularly a few states, you can see that a sizable and robust marketplace has developed. In the darkest shading there, you do see California, and but also Colorado and Texas, Arizona are some of the more sizable and actively traded markets. But ultimately, from NASDAQ's perspective, what we see here is that there is an asset that is people are looking to buy and sell, looking to do so in an efficient manner. And so where do we apply what we're good at in order to be of service and provide some level of value to those buyers and sellers? And so, the two ways that NASDAQ typically thinks about applying our skill set to a new asset is through transaction and facilitating transaction, and then also through providing good information. And so that, in terms of the transactions themselves, I think everyone would kind of understand, based on some of the commentary we've heard here earlier, water is a hyper-localized, opaque, parochial kind of traded asset. And so we're certainly in the early stages of trying to figure out what is the best way or optimal way to facilitate transaction. But, in terms of providing information, that's something that we feel like we can hit the ground running on, in terms of taking that data that is out there. And so, Lance touched on our collaborative effort to bring the NQH2O index to market, and then take that next step in terms of taking that information, aggregating it into something that is a useful, transparent, and readily available benchmark for buyers and sellers to understand what their fellow buyers and sellers are defining as fair value, either in a spot market or, we might touch a little bit on futures market later on here. But just to give kind of an intro here, this is a traded asset in a vibrant market that already exists and has existed for quite a long time. So if we push to the next slide, what we're going to see is within California, when we drill down, is that there is quite also a bit of variability in terms of the year-to-year activity and the makeup of the buying and selling that goes on in the California market. So here we have the three kind of broad buckets of environmental, agricultural, and urban. And as you can see, the uses are quite varied depending on location. I think that's kind of to be expected when you think about where some of the big agricultural centers are within the state, as well as where some of the big, densely populated areas are in terms of urban clustering within the state. And so, even within the state of California, I wouldn't necessarily say that there's any type of monolithic way of thinking about who's using water and for what end. That really it does come down to location as a key driver of how communities are thinking about water and using water and pricing water. And so, with that said, our goal when we came up with the NQH2O index in partnership with Velas and Westwater Research, who's the data provider and the subject matter expert. So those three parties, when we came together a number of years back, was to really try to optimize for two things, for relevancy and robustness. And so relevancy is obviously, if we're going to create a single benchmark, we want that benchmark to be understood and useful to the underlying market participants. Because obviously, if we're going to create something that's so broad and that incorporates so many idiosyncrasies in terms of the prices and volumes that are touched on, then we're going to be really struggling to provide any value or anything of use to those market participants and the broader set of eyes that would be looking at our index. But on the flip side of that, of course, Lance touched on, we wanted to have a sufficiently robust underlying market that really captured a serious economic risk and economic need in terms of the dollars considered within those transactions, as well as then the knock-on economic activity that relies on that water supply in order to either allow for certain goods and services to be delivered or just for daily sustenance. And so that's, I think, why California really made sense in terms of where we began this journey with the NQH2O index. And so moving on to the next slide, we're going to get a look at some of the raw data that backs up the index. So I saw a question earlier about how do we know these are physical volumes? Well, Westwater's data that they provide that underlies the index is entirely based off of physical transactions. So this is a transactional-based index. There's no level of assessment or reference of any kind to hedges or any type of other type of transaction. It's a consideration of cash in exchange for physical molecules. And as you can see here, the variation year to year in terms of where those trades are going off in the California market is quite substantial. And so from an index perspective, that's really exciting to us, is that we can provide some level of understanding of where you are in these shaded blue bars, whether you're at the very top or the very bottom. Obviously depends on time, but also depends on the information that a buyer and seller have in their effort to assess fair value. So while those the variance in pricing is a challenge in terms of being able to normalize across those again idiosyncrasies that can impact any one given trade, it is also a tremendous opportunity for us to be able to provide that information that up until now, or up until we launched this index, was not available to buyers and sellers to be able to understand what their fellow market participants were, what the level of value they were assigning to water in the California market. And so, in terms of what's ultimately going to be driving that variance in price that we see, if we go to the next slide, it's really a story of hydrology. And so what you see here is the Palmer Drought Severity Index. It's but one indicator. There are a lot of indicators for hydrology, but this is a time series that goes back well over 100 years and is produced by NOAA, the National Oceanic and Atmospheric Administration. And what you see is a reading on a monthly basis of the overall hydrologic conditions in California. And the higher we go into the green, the more lush and wet conditions are in terms of overall hydrology. And the further down we go into the negative figures, and the more brown and barren things become, because hydrology is overall in a drier state at that time. And so, obviously a lot of attention to the casual observer. We'll pay a lot of attention to the extreme droughts that we've heard about and in California over recent years. But really what's interesting to note here is that those periods of extreme and prolonged drought are punctuated by periods of extremely wet hydrologic conditions. And so, to kind of synthesize some of what Mark and Lance were saying from before, this is a two-way market in terms of its risk. It's not just that water is in chronic shortage of supply, but rather that then for periods of time, water is actually relatively plentiful. And so the economic risk of variance in supply and thus in pricing is real regardless of which direction the market is going. And that's why we think that this index is really an exciting addition, a tool to the toolbox for these market participants. And so kind of take it from the step of hydrology to supply, what we see in the next chart is going to be the interplay between the two. So this is kind of zooming in to the last 20 years of that PDSI time series and looking at the way that some key indicators of supply. So this is surface water market. It is but one part of the broader supply of water in California. Groundwater is a massive part of the marketplace. But this is sort of a good bellwether or proxy for where overall supply conditions are, given that the surface water market touches so many different constituents in the California water market on a yearly basis. And so really what we're looking at then is that for those that are holding entitlements off of the State Water Project, which is a series of infrastructure and water conveyance system that is operated by the Department of Water Resources in California, in blue, and then in yellow, the Central Valley Project, which is another infrastructure project that is operated by the Bureau of Reclamation that's really more focused on the agricultural entities in the Central Valley. These are two key supply sources. And so there are entitlement holders that hold entitlements with the government for those supplies of water. And then depending on where, largely depending on where hydrology sits at any given period, the government sets a level of allocation for those entitlements. And so while the relationship is by no means perfect, and I'm sort of oversimplifying because the allocations are announced and then revised throughout the spring, so I'm kind of using a flat line where otherwise it really isn't meant to be a flat line, but just to give an overall kind of illustrative look into when the PDSI is low, conditions are dry, supply is low, and vice versa. And so what market participants are grappling with is that variability in supply. And that's a year-to-year phenomenon, and it's one that will continue based on what we saw from that larger time series. We suspect will continue to be a big risk driver in the California water market. And so to tie it all out, we saw the time series in the next slide here. We're going to see the time series that Lance touched on before for the index history, and we're looking at, again, sort of that simplified version of allocation, but just to give you a sense of overall where supply generally is and where the index is. What we can see is that when supply is low, price is coming up. And as hydrology begins to move from a drier to wetter state, we see that supplies come back in terms of the allocation levels to those entitlement holders. We see that price generally is going down. Certainly not in a perfect relationship. This is a nascent and a new market, new asset in terms of from an economical perspective. There are some inefficiencies whereby the same asset, same entitlement can be sold in the same place for two different prices based on asymmetry of information. And we're hoping that this index is kind of a step in the right direction of giving people that information to understand what fair value really is meant to entail. And so this is something that we've been pursuing now for, as Lance indicated, a number of years with the index. And the next step in our journey, and one we're very excited about, is the listing of cash settled futures on CME starting December 7th that will be benchmarked to this index. And that's going to allow people to take what otherwise is this informational data point or time series and put it to use in terms of a risk management tool to offset some of the risks that a lot of other folks here have talked about on the panel. And so with that, I think I'll wrap it up and send it back to you, Duncan.
Okay, thanks, Patrick. So our last participant in the roundtable is Leslie McCarthy. Leslie's been the co-creator of this event. And Leslie is going to bring it sort of full circle back to a community level. Leslie?
Thank you, Duncan. It's an honor to be here. Thank you, Mark, for the platform to gather all these new waterfronts, and Duncan for moderating us through this great morning. I guess in terms of what I bring to the discussion, I am an environmental advocate. And the way I have defined this area is having to do with deep education, knowledge research, and ability to communicate with others. And I've been learning rapidly over the course of the last few years. Advocacy is essentially designed as a form of sales, and conservation education, we have found, can make an enormous difference in this rapid period of change and challenge. I love being part of this conversation. In terms of background, I am a competitive team sports mom with young adult sons, and I've nearly raised my family. I like to think of the analogy that I have my head in the clouds, but my boots on the ground. As we've discussed in so many different facets today, water is a super precious resource. and it's an essential part of our daily lives every single day. And now we can talk about touching into a few takeaway solutions. What we're really doing is building a sense of compassion around water education and conservation with an authentic goal of helping, and advocacy is an example of this. From my perspective, this is a time to listen and a time to learn. Important to think creatively and move ahead with action, because we are all individuals, we all are within families and in community. We represent learners, educators, academics, investors, foundational leaders, and creators for the future. And as we just crossed over so many different discussions moving forward to access water, we're constantly asking, what's next and why should I care? So whenever posed with a opportunity to learn, and conservation, climate change, and all topics around sustainability are vast. It really comes down to a sense of understanding the data and then figuring out what you're going to do about it. So from my perspective in community, I wanted to share a couple of examples and the ways that we engage in steps. One is we have a green team collaborative organization, which is communicating all about the different projects in town. I live in Darien, Connecticut. We have about 19 different nonprofit organizations that participate in moving the discussion, the green discussion forward. We have partnerships and we really talk about efficiency and how to engage next. So one of my experiences has been getting involved in conservation education in a garden club. And what this has really done is allowed us to share stories around climate change with various groups. We build awareness about conservation and civic improvement, and share all kinds of resources such as documentaries and books and speakers, and we are training together. Couple book suggestions. Yesterday was a big day in the green world, and kicking off with the green team in the morning, we talked about a variety of projects. Are you able to navigate the slides forward, Duncan?
I got the slides.
Mark's doing that. Yep.
Perfect. Thank you.
You want the next
In
one?
terms of a couple of examples, focus, we talk about birds, pollinators, maintaining trails, farmers, land, and kids. And it's really a matter of thinking globally and acting more locally. And we are learning about the importance of policy and planning and how this impacts us all. And really it comes down to kind of a goal and the boundaries around clean water and our ecosystem health. Because one of the things that becomes clear in these discussions is that so many elements are interconnected. Water affects our health and our environment every single day. So with water that flows both upstream and underground, this includes ponds and rivers and wetlands, streams, oceans and lakes. It touches not only millions of Americans, but everyone around the globe. So now we're focused on sustaining cleaner water systems in development. And ultimately, from a conservation perspective, pollution contaminates the turtles and the beaches and the whole ecosystem. So what do? We have a few tips and tricks. And just to kind of give a quick little green minute, we try to be mindful and practice mindfulness around waste. An example is practicing composting, which is an easy enough discipline, and what it translates into is less need for fertilizers in the future. It just means having a good relationship with waste, and it means that less excess will go into landfills. So I'm a new composter in the last 15 months, and incorporating this simple practice really means that you can see how much you can waste or not waste. And it helps to regenerate soil with positive nutrients, and you'll just become much more aware of your own food use choices, supply, and efficiencies. I mean, there's interesting organizations. Examples include Misfits, Imperfect Foods, Ugly Fruit, where there's less than perfect produce. And there's lots of different ways to be efficient in terms of composting. In gardening terms, we talk a lot about trees and plants and grasses, which are essentially like buffer zones. Across the green team examples in groups, we encourage native plantings. And the reason this is positive is because it really helps to mediate some of the impacts of climate change. Native plants have longer root systems and can be more drought resistant. And it means that they can also store more carbon, which just helps to better naturally filter the water. This can help soil hold in the nutrients, and even ocean plants, which are helping with positive O2 and help filter out bacteria. We plant more trees, which can also provide a cooler atmosphere. Wetlands can help us to manage runoff from storms. And trees are important because they give us oxygen, they store carbon, enrich the soil, and they nurture our animal life. So as our food supply is changing, the population is increasing between now and 2050, as noted in a way that is changing our patterns. And what that means, it's best to be efficient with your shop and your prep and how much as individuals you're using. Examples in our community, sometimes, for example, a wonderful collaboration with Darien Environmental Group. We organized children's projects, which included succulent plantings. We educated around water and allowed children to get a hands-on sense of getting their hands dirty and also learning steps in conservation, because every drop counts. Another project was a community gathering during a STEM afternoon of activities in March, where we provided materials for children to plant sunflower seeds and into peat pots and decorate pollinator examples to reinforce the importance of how important it is to nurture our own healthy backyards. Pollinator projects you may hear of, which really reinforce healthy yard practices, minimal use of chemicals and pesticides, which can ultimately get into our water supply and create havoc. An example in our town is Highland Farm, which is a property that is now town owned and has recently gone chemical free, which is a huge bonus because it's a location that provides beautiful, healthy outdoor spaces for our activity. In terms of our own backyards, we educate about bird life, providing water sources, shelter in the winter, and other reinforcements to help the migratory pathway of the birds, so they're an ongoing, vibrant part of the ecosystem. You can build brush piles in your backyard and better allow for decomposition, which is better for the soil. We like to support the local CSAs and organic farmers through local markets. CSA is a farm share. It's a community sustainable organization. You can link into getting regular deliveries of produce, which better help the farmers navigate their own pricing strategies and allows for a much shorter transportation time period to get food from the ground organically to our table. I personally am pursuing 80% plant-based direction in the future, which is easy enough to put into practice. We reinforce getting out in nature with all the period of COVID, the challenge of rapid technology adoption for all ages. It's absolutely been proven and is unfolding how important being outside is for all of us. So sometimes we have trail walks, which reinforce health and wellness and are less isolating than strictly being focused on technology. It helps with stress, and research is now indicating it can help lower blood pressure and enhance our immunity and help to better manage anxiety, which can help to really increase the rate of our healing. So in conclusion, I would like to just share, a couple really simple takeaway tips. So much depends on our usage of water and conservation. We can find many ways to make some improvements, getting down to some micro ideas. With a world where 70% of the Earth's surface has water, yet only 1% of that can be used by humans. It's been estimated people use 88 gallons a day. And if you think about just using what you need and drink what you take, eat in season like the farmers, and practice that this precious resource is one that we want to make available in the future. We face drought. You can pursue getting efficient shower heads. You can shorten your shower by a couple minutes each day, which can save 5 to 7 gallons a day. You can listen for leaks and fix those if you hear drips and hissing, so that you're not wasting unnecessarily. And there's ways to also calculate your water usage, which is a link I can share in the future. To wrap it all up, I would say, what is it and why we should care? I think about this as a really important action step forward and a call to action, because we all have a heart to plant these seeds now for the future. We are learning how interconnected health is to our environment. We need healthy air, water, and soil, and it impacts all the ranges of our health. So taking on the challenge of water to build ahead is a vital cresting wave that's going to nurture the seeds of hope and inspiration in the future. And in closing, I will say a great quote I live my life by, though I'm not sure who the author is, reminds us, I wondered why somebody didn't do something. And then I realized I was somebody. And complete conclusion, I look forward to being a part of the change with all of you. Thank you.
Thanks, Leslie.
Thank you, Leslie. I guess I'll just have one comment. My observation is we've learned that water has a nasty habit of chronically being in the wrong place at the wrong time, geographically, seasonally, and because of climate. If you were solving that problem for data, somebody would pay you 30 times revenue. We've got a lot of people here that care. We've got a lot of tools and solutions. And, I think if people are really serious about ESG investing, there's a return to be had here, and we need people to get serious and appreciate it more. I guess that concludes the panel. We're running a little short on time. I was going to have the panelists ask each other questions, but I actually feel like we really appreciate the audience that's come today. If there's anybody in the audience that wasn't part of the panel that would like to ask a question or like to comment, please unmute yourself and feel free to participate here.
Don't be shy.
Hey, Duncan, while we wait, it's Mark Robert. I'd like to make a comment. I think some of the data that our friends at Velis put up, that Lance and Patrick put up on the water volatility. Just imagine trying to manage a business through that, where you have long-term demand for water and you've got price fluctuations, in a single year, which could double. And you're trying to plan long-term either water supply needs, or if you're growing something, imagine trying, as a major input cost, trying to manage that water fluctuation. It is a tremendous risk, and it's with the recognition of this risk and the availability of products, both short-term and long-term, as we provide, that we're going to start getting some real movement on water solutions.
Hey, Mark Robert, it's Dan. I just want to
Yeah.
kind of amplify what you just said from a little bit of a different perspective. One of the challenges that we saw at PepsiCo, and we continue to see not only in the US, but in other countries, is as ESG and consumer expectations and just responsible business accelerates companies' water improvement efficiency actions. You're saving a tremendous amount of water by using it more efficiently. Unfortunately, what we're also seeing is a commensurate increase in water pricing from local utilities the next year, because they need to maintain their base, obviously. So if a company is using 30% less water, which is a good thing from a CSR and a responsible business perspective, you're not fully realizing the savings from that 30% efficiency because the prices go up to kind of neutralize that from the municipality the next year.
Duncan, sorry, you go.
Yeah, go ahead.
Hi, Duncan. This is Shankar. Thanks for inviting.
Hi, Shankar.
I just wanted to respond to what Mark said, and I'll give you a practical example. In my previous job, this is way back in 2009, we bought about 30,000 acres of almond orchards in Australia, and the coverage for water is slightly different there. But just to answer Mark's point, I think we went on a limb and bought those assets, and it came with water rights. But I think the point, what he makes is very well amplified. Institutional investors are now turning towards permanent crops. And if you look at price per acre for land and the kind of bets you want to make, and it's highly resilient on water. So having the ability to de-risk water as an asset class is useful for investors, but it does come with its unintended consequences, because asset managers are able to artificially push up the water than its realistic price for demand and supply. So that's an area which then gets into social issues. So I think Australia has been through the learning curve, and I guess California and other parts of the US will sort of go through that. But this is a fantastic session to get involved. Thanks.
Yeah, I think, Shankar, we find that a lot of permanent crop investors don't fully understand the long-term water availability embedded in their investment as a risk. And, they're going to need solutions, not just spot, but, where do you get 30-year supply of water? And that's the market we're in.
I just wanted to point out, you mentioned the SDGs. That's a major initiative we have, Dan, in that we're not all here to make money. I mean, we are, but also both impact investing and complete philanthropic. And we'll have a follow-up event to what we did in October, and probably a summit. So we'll be returning back to that. Duncan, Torin had a question. I don't know if Torin's on.
Torin, let's see. I'm going through these. Does anyone have insights into better scaling water testing and sampling?
Dan partly answered that, I guess. I see it. Any other questions?
I would just love if Duncan could briefly note his involvement with food innovation with the parable water lentil direction. I find that fascinating, and don't know if you
That Tony's business, Duncan?
Yeah. Well, Mark knows a bit about that business. You know, it's an example of being able to create protein much more efficiently. And you know, they essentially, it's a company in Florida that grows water lentils on aquaponds, recycles 98% of the fertilizer and 99% of the water, and grows sort of the equivalent amount of protein about 6 times more efficiently than what you would do if you cultivated an animal. But that kind of comes back to what I was saying before, right? I mean, the market cap, the cost to do something like that and develop something like that, you know, it's not inexpensive. You know, it's probably $200 million to get to where they are today. When you talk about it in the agricultural space, it seems like a big number. When you talk about it in the technology space, it's an odd lot. And that's part of what I was trying to get at before. I think that, you know, our investment community is very accustomed to paying these massive market caps for a lot of these technology solutions that have a lot of global scale. And when you talk about trying to do something efficiently that benefits, you know, that creates food more efficiently, you know, the challenge is it's actual cash in the ground. It's not trading there on some Bloomberg push button. And that's part of the challenge we have. You know, it's basically old-fashioned cash flow that is going to get developed out of making these kinds of physical investments. And I'm not sure they're quite appreciated as well as the statements about ESG investing would have you believe. That's a challenge for all of us. If you want to learn more about Parabel, talk to me. Talk to Mark, he knows about it. He's met the CEO, Tony Tiarks, very interesting fellow. And there's plenty of other agricultural related, you know, businesses that, you know, Mark's involved with it, with his network as well, that would touch these bases as well.
Can I just talk about one of them, just not to talk about my book, but what do you think of indoor growing? Because this is an example of a company that's reusing recycling water, and they think that they've got a lot of tailwinds, and then over time, this is going to take over a decent percentage of ag. Will that be more water, you know, a better sustainable model? I mean, just curious what the group here thinks.
The indoor growing uses 10% of what the field water uses. The other big thing about indoor growing is there's no runoff into the ecosystem. So, for example, a traditional field farmer puts down nitrogen. Nitrogen is a huge need for plants. So he puts nitrogen on, but he doesn't know how much it doesn't know how much nitrogen to use because they don't know what the rain's going to be, what the weather's going to be, how much the plant's going to use. They can only estimate. So, and if the plant doesn't have enough nitrogen, the plant won't grow. So they over nitrogenate, and then the rain comes along. It seeps into the water system. The water seeps out into the ecosystem, lakes and rivers, and you get those algae blooms, and you get phosphorus. You get a whole bunch of other things. So nitrogen and water and farming are massively enclosed. But when you do the indoor growing, everything's controlled. Nothing goes out to the ecosystem, and it's totally cycled and recycled around. I don't know if that answers your question, but
No, you had definitely amplified. I'm curious with all the. Thank you for that. And the panelists. This is also part. It's a portfolio company of Ceres, and Ceres also has its rating, its scorecard. I don't know. Brandon Zick, I see, is on. I don't know if he's available to speak to it. But or is anyone else? You know, I think we talk about problems. And that, what was the number Sean Lawless used? $60-some trillion could be at risk in the global GDP if we don't make some changes. And it seems like there are some opportunities to make some changes and back those companies.
I think it's a great direction and can give an example of a local project called the Salad Project, which was put together and provided kits of organic seeds to grow your own lettuce sources. That, I think, is an example. What you're doing is very progressive, and there's no doubt on a global level, there's a big tide changing with the food supply, and moving forward, this type of idea is going to be an important model leading the way.
I mean, here's another company that was on last week that's doing distributed farming, keeping everything local looped.
Hey, Mark, it's Mark Robert. We actually, as part of our investment strategy, we own about 35,000 acres of farmland, and we farm them. And we advocate for a much more optimized use of the farmland, where you rotate crops. So much more rotational fallowing, where we actually put half the farm out of production, use that land for, one, to re-nitrify the soil, but two, for optimizing the water use on the farm for non-farm uses to other users. But we think, yeah, there's going to be a lot more management of the full farm package, including water, biodiversity, soil quality, and ultimately the consumer is going to drive that. We think provenance is going to be a big deal, a lot more labeling, a lot more understanding of where things are coming from and how they've been grown. So,
good point. It's a lot of acreage, 35,000.
Yep.
So if I had $1 million, $10 million, $100 million to invest, and I want to make money over a 10-year period, how would we allocate it?
Opportunity zones.
Opportunities.
Opportunity zones, 10 for sure.
But it's not a cap gain.
Sorry?
Just assume it's not a cap gain for a moment. But I hear you.
Yeah.
I think it's probably local projects, isn't it? I mean, Lance would tell you he wants you to go buy a couple $1 million of water futures. I'm sure there's a time to do that.
Long-term call options on the water price, Duncan.
Okay. But certainly, I've run across a few projects. A lot of times they're quite localized. There's a drilling operation in Florida that's being set up, and it works both ways. They drill down to get fresh water, and then they drill further down to dispose of wastewater that goes into these deep caves that go then, deep into the ocean. So I imagine there's a lot of projects like that. Mark, you probably run into these. Alex, I'd imagine you run into these.
Yeah.
Maybe somebody can comment further.
What I would add to that is, not looking at it as a specific project. What you would want is something that's uncorrelated, that represents strong kind of organic growth and the ability to get some upsized returns, either because of inefficiency, operational usage, or financial engineering. And the reality is that investments across certain pockets of the water sector certainly can hit all three of those criteria better than most other industries. But the key is obviously to find what pockets exhibit those three characteristics. And there is no, single, massive win in water. There's going to be multiple, right? Whether you're looking at it from the technology side, or from the water rights side, or from the local, project finance side, or from the private equity side, from the infrastructure side. The reality is you got to identify ones that exist within, that have those characteristics in the various pockets. And And that's fundamentally the difficult part, is that there is not going to be one Twitter or one solution that hits all that's going to make everyone billions. It's going to be many.
Yeah, from our perspective, I think we see, obviously technology has been a big draw. A lot of investors have been attracted to the sort of the Twitter of water, or there is no technological solution that's going to solve all of the water problems. It will be part of the solution set. But from if you want to deploy hundreds of $1 million, from a big size perspective, we would do infrastructure. Obviously is the biggest, can absorb the most. It's probably the most difficult to access because it's you got to pull it all together. It's a lot of little deals coming together. From our perspective, also water-rich farms in the Western United States, where you've got limited downside tied to your farming assets, and you've got a lot of upside on the water development opportunity. You have no CapEx requirements, and we like to think of it as sort of a double A bond, triple A bond with a call on water. You got a current yield and a call on water and real asset protection. Mm-hmm. But the sector can absorb lots of money. It's from our perspective, the highest return, risk adjusted, still remains water resource development in the way we do it in the Western U.S.
Sounds like Water Property Investors 3.
There we go, Turner.
So what kind of returns are you looking at on IRR basis over 10 years?
We're on a gross basis, mid to high teens. 10-year, it takes, the one element is time. It takes time to develop these markets.
Can I just make a plug here? We just literally set up, we have so many groups. We just set up a water group, and I put it in the chat. I'll put it here again. So if we want to continue this discussion, similar to the way the Future of Work group did, they sort of use this as sort of an ongoing thing. Ag now has different members and very active feed. So this discussion can live on beyond the chat here in this particular Zoom. So just join the water group, and maybe that's the last question. What would you like to do? What would we want to go? Where do we want to take this conversation next? Into the investment ideas. That's one area we started to go through for 3 or 4 or 5 minutes. Then you have Leslie's sort of angles. Like everybody has a certain lens here. If we want to take a next step, and I'll just again remind everybody, not this one, but here I can just literally start typing, and we have a new set of events in process. So how would we like to move forward?
I mean, if it's me speaking, there are problems out there and there's solutions out there, and what people probably need is concrete investment ideas, that are addressing the infrastructure needs, and that show you a return profile. I think those are scarce. It's just hard to find. It's just not obvious, right? To many people.
Mark, one concept you might want to think about is the effect of water on the food supply and how it's affecting the food supply. So, when you have droughts in, California, cost of food goes up. Now, we're not talking about grains, but we're talking about the vegetables and things like that. When it doesn't rain in Spain, England has no food. Has no vegetables. There was a whole bunch of affecting that. The other part about water, as soon as water gets polluted, you have disease. So, we're coming up to Thanksgiving, so therefore romaine is going to have be poisoned, and we're not going to have any romaine lettuce. So, it's the third year it's happening, and that's because of water. The source of the pollutants are coming from the water. So water is really affecting a lot on the food supply, which is affecting a whole bunch of other industries. So once you affect the food supply, you're affecting costs to the restaurants, the fast food restaurants, the retailers, They mentioned it earlier, but it's a really ripple effect. It's like dropping something in a pond. When you do it to water, it just affects so many other things.
How would you then synthesize that or crystallize that into a theme of an event?
Food supply, water and food supply. The water effects on food supply and the opportunities it represents.
Okay, maybe these can be married.
Yeah.
I love that direction. I would have two thoughts. One is a next step to share with this growing water education community is we'd like to provide some curated resources for your future information. And two is I think it might be a really marvelous level of feedback just to gain insights from those who participated today in terms of what they're seeing and how they'd like to suggest for forward content. And lastly, I'll just relay a brief conversation with a woman who has helped to navigate the Eagle Scouts and the Boy Scouts over a couple of decades. And she was telling me that many of the young professionals who had been Eagle Scouts had amazing projects, which is essentially like really raw research. And I was just thinking it would be marvelous if we could tap into the young professional community, those who are also studying environmental science and plant science and urban forestry and just emerging from schools, because they would have their ear to the ground in terms of some really knowledgeable training that might be insightful.
Good point.
Mark, now to spin off of what Leslie just said, another area is water purification in cities. That's somebody mentioned earlier, where's the business opportunities? Water technology, water purification technologies, huge amount of money and investing in that.
So just so everybody knows, Tuesdays at 10:30, we get our co-leaders together, and on Wednesdays, we talk about events, and we go into breakout rooms. So if anybody wants to come up, it's this same Zoom, this is the community Zoom link, come on Wednesday, 10:30. You can, literally, that's how Duncan and Leslie put this together. Leslie was doing education, which is gonna be in 2 weeks or so, and Duncan gave an idea, and I put Leslie and Duncan together, and that's what they came up with. Isn't that right? I mean, basically.
Yes, you hung that albatross on us.
Yeah, and you ran with that albatross.
Yeah. Anyway, yeah, it was good.
So
it was good.
You can come, when sort of our community village days, Tuesdays and Wednesdays. And if you've got anything you want to help, we can, please, I have to make my plug for the app again. Just come. It can all reside there, either in the main feed, or you can have the water group now. And I put Leslie and Duncan as co-chairs.
I'm feeling like there's an opportunity to make team sweatshirts here.
Right. I mean, I got to create a water group now. Where am I going to fit it? Everything's so nicely in rows and columns. I got to figure out water's an intersection, right? That's what Impact said. It does touch a lot of groups.
You should just make the whole thing blue.
Right.
Because it touches it all.
Yeah, well said, Alexander. Well, I've been going over as well. So maybe we'll leave it there. We'll do that survey. Leslie, you can infuse your content for the survey, and we'll get it out to everybody.
Okay.
And thank you.
Mark, thanks again for your platform, and thanks for helping with the logistics of this. I thought it went really smoothly.
Well, thanks to all of you.
Great
Appreciate
experience.
Thanks, everybody.
Yeah. Bye.